Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from Esther, and Esther writes from Grand Rapids, Michigan. And Esther writes, Gerald, everyone always says that you should pay off your mortgage early, but I remember you saying there was a danger in doing so. Why? Well, that's a great question, Esther, and you're right. The conventional wisdom is that you should pay down your mortgage as quickly as possible by making extra payments, by reducing your principal balance. And there's many people who suggest that you do that, people like Susie Orman. And before I talk about the danger associated with that, I want to first acknowledge that it makes sense to want to do that, to want to reduce your monthly fixed payments, which you do when you pay off your mortgage early. However, the danger is when you haven't fully paid off your mortgage and you run into a financial bump in the road. So it's like trying to cross a river as opposed to taking a bridge. You don't get credit for getting halfway across. And if you get into trouble, you may drown. So all that principal balance that you paid, if you run into financial trouble, you really can't go back to the bank and ask for that money back. And if you miss payments, even if you try to refinance, you're really just giving, spending more fees and giving more money to the bank anyway. But if you miss payments, it's going to be hard for you to refinance anyway, and they'll give you a higher interest rate. So I think the safer way to pay off your mortgage early, if that's what you want to do, is to allocate money on a regular basis, even on a monthly basis. And instead of paying it directly to the bank, put it in an interest-bearing account that you control until you have enough money to pay off the entire remaining balance. Because again, if you get stuck in the middle, having not paid it all off, you can't go back and get the money. The bank's not going to give you credit. Okay, and I've seen many people, well-intentioned people, get burned in this way. And it brings up a more general important point, which is that you never really own a property free and clear. That's a phrase that I think is used erroneously by many people. So they say that if you don't have a mortgage, or if you pay off your mortgage, you own a property free and clear. That's not true, okay? Because you always have to pay property taxes, you always have to pay insurance if you're smart. There's always upkeep and capital improvements, etc. So there's always costs associated with owning property. And you see good people get burned in this way. So retired people often, who have already paid off their mortgage and they're on a fixed income, sometimes find themselves in a tough situation because they still can't pay their property taxes or their insurance. So remember, there's always costs associated with owning a property, whether you have a mortgage or you don't. But if you're going to pay off a mortgage, I strongly suggest you put the money in an account that you can control, and that's your nest egg. That's your nest egg that you can use if you have a financial hardship, and hopefully if you do put money aside on a regular basis, when you have enough to pay off the remaining mortgage balance, you should do it then. So it provides an insurance policy and a cushion if you have temporary financial problems. So, thanks for your question, Esther. Good luck. For more real estate information and tips, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.